Okay, let's do a little video update. It's Wednesday, May 22nd. NVDA reported earnings tonight. It's about 11:45 p.m. I turned into a pumpkin at midnight, so let's see if we can fit this in 15 minutes or less. So let's start with the dollar. A lot fewer charts today than the last time, so we will get this done. Looking at the dollar. So the dollar's been rallying the last several days, actually since the CPI report last week. Smart money's still bearish, but the last 4 weeks, they've been buying it on a relative basis compared to retail traders. So it'll be interesting to see what they did in the days after the CPI report. Get that information on Friday. It'll be interesting if they continue to buy. That could be a little bit foreshadowing of a potential risk-off event sometime, several weeks, potentially several months from now. I don't think we have one in the immediate future, but, knock on wood. But what's interesting is that the dollar is rallying, even though oil has been coming down significantly and interest rates have been coming down, yet the dollar's been bouncing. Now, if you look at this chart, obviously it's just been chopping around in a large range. So it's not so surprising that the dollar's bounced a little bit after last week's sell-off. Given that relative sentiment in the dollar is bearish, and even though the smart money has been buying on a relative basis, it's still solidly bearish. So I wouldn't be surprised if this turned around and started going lower again, especially because of what's happening in oil and with interest rates, which, they're all intertwined. Here we have oil. So oil in April was nearly $88. Now it's at, under $77. And if this is a little bit of a bear flag here, it looks like this thing could go down into the low 70s. Now that's good for inflation. Growth is still robust. So if you have good growth and oil's coming down, that should actually help growth a little bit. And it should help inflation, which both of those should be tailwinds for equities. So equities seem to be in a little bit of a sweet spot here. The smart money is still in the aggregate, leaning bullish on equities when I look at the multitude of relative sentiment indicators that I look at. So all of those things should conspire to be a tailwind for equities. Now they have gone up the last 4 weeks. They're a little bit overbought. They pulled back today intraday after OMC minutes, but then NVIDIA released earnings and they bounced after hours, and they're up. So the NASDAQ's up 1%. It's 11:45. They're up 1%. The S&P's up, 60 basis points. The Russell 2000's up 35 basis points. So it looks like tomorrow could be an up day, but you never know. The big money can't really trade after hours. So let's see what they do with NVIDIA tomorrow morning. Maybe they bring it lower. Maybe it's a sell the news event. Markets do tend to top on good news. NVIDIA had good earnings. There's that potential. I don't think we've topped just yet. And I think we have several more weeks, if not several more months. I would lean towards several more months before the market potentially tops, but you never know. This could be the good news event where the smart money sells into. So we'll have to see how things play out tomorrow. But with respect to oil, so it's come down a lot, and here's energy stocks, and they've basically moved back into this ascending triangle, which they looked like they had broken out of earlier this year, several weeks ago. Now, if oil doesn't stabilize and start moving higher, then we could potentially see XLE fall even further, and that wouldn't surprise me. And that actually has a little bit to do with our next chart, which is the NASDAQ versus the Russell 2000. So my belief is that, so this is at the top of the channel. This is a multi-year channel. We only show about a year here, but if you look at a longer term chart, this is a daily chart. If you look at a longer term chart, this channel can find the ratio of the NASDAQ to the Russell 2000 for almost 10 years, I believe. So we hit the top of the channel, but as we hit the top of the channel, the momentum kept going lower and lower, and it's still going lower as this thing is kind of chopping around, going sideways. But the NASDAQ has outperformed the Russell 6 out of the last 7 days. And what is really interesting is that the Russell 2000 seems to have a lid on it at about 2110 in the futures. So I've watched it, intraday like a hawk the last several weeks. and it just cannot get above 2110 and sustain. Now, that could be bad news, and that might mean it's going lower, but it could also mean, if, I don't know if people remember this, but in 2023, the NASDAQ and the S&P 500 in April and May basically went sideways, and they both had lids on them, and they would go up to a certain level, get beaten down, go up, get beaten down, go up, get beaten down. And that happened, that lasted for 2 months. But when they finally broke above that level, then they just went vertical into June and July. And I think, the S&P, I think that lid was around 4,300, and it went up to 46 or above. So that was like a 7-8% rally, really quickly. And I think the NASDAQ probably had a 10 or 15% rally after it broke higher. So we might see something similar with the Russell 2000. If once the supply is absorbed at 2110, it might just, take off and go up to 22 or more. So I think the all-time high is around 24, and it's substantially below the all-time high, while the NASDAQ and the S&P are at new all-time highs. So we might see a catch-up trade there. I do expect this ratio to eventually work its way down to the lower end of the channel. Although I had said in previous videos where it wouldn't surprise me if it went back up to the top of the channel again before moving lower, and it looks like it could be doing that, although it has outperformed 6 out of the last 7 days. And I would expect the Russell to kind of catch up or to outperform over, the subsequent few days, but we'll see what happens. Now, how this ties into energy is that the Russell 2000 has a decent concentration of energy stocks. And if oil keeps going lower and energy stocks can't get back up, then that might weigh on the Russell 2000. So, this ratio might continue up to the top of the channel. But, if it does and the momentum is still moving lower, I would still think that would be a good trade where you're long the Russell and short the NASDAQ. Now, here's the chart of NVIDIA. So I think we have our answer. So one question that I had was, if this is a 3 peaks in a domed house, the domed house tends to take the form of a head and shoulders pattern. So the question was this little thing here, a left shoulder, and then this was the head, and then we had a right shoulder, and then we're going lower, or was this big thing here, the left shoulder, and then we're going higher to form the head, etc. Now, after hours, NVIDIA is over 1,000. So it looks like this is probably going to be the head, which who knows how high it will go, but I think eventually it'll come down, probably make a right shoulder, and then, that could be the end of the bull market sometime potentially later this year or maybe early next year. Here's gold. So what else is new? Gold went up, hit a new high, then immediately fell. I mean, you can't get comfortable with gold or silver. They're so volatile, and there's just so much incentive to beat them back. And the smart money has been selling them under the hood the last several weeks, even though gold relative sentiment is bullish and dollar relative sentiment is bearish, which is a very good combination for gold. Over the long term, that's been, a great combination. But under the hood, the institutions have been selling, and gold relative sentiment will turn bearish in the next few weeks. Now, it could be the case that I'm using a smoothing parameter that's too long, and it maybe should be shorter and so it doesn't hang around too long with gold and silver. I'll have to look into that. I have looked into it before. It was a little bit indeterminate, but I do suspect that the smoothing parameters that I use for relative sentiment for equities are probably different from the ones that you should be using for gold and silver. Although the ones that I have been using have worked quite well historically, but again, the question is this going to stop here at this trend line and take another crack higher, or is it going to continue moving lower? Now, silver is at an interesting juncture. So when I took the snapshot, it was here, but it has moved lower, and it's basically hit this juncture here where you have this uptrend line meeting this channel line. So if it doesn't hold here and bounce, then it might not bounce until it hits the lower end of this channel. So, this is probably do or die for silver. And if silver doesn't hold, then gold probably doesn't hold, and they probably both move lower. So that will be something to watch. And it wouldn't be so surprising given how institutions have been selling on a relative basis. Basically, relative sentiment's probably going to be a little bit too late to exit if that's the case. But, we'll see if they can stabilize and maybe, make another stab at moving higher. Here we have TLT. Now, it's been rising. Interest rates have been coming down. Oil's been falling, which obviously helps long-term interest rates. The dollar had been moving lower, so that all makes sense, even though the dollar has been bouncing this week. But if oil continues coming down and interest rates continue to fall and TLT continues to do well, then it's possible, given that institutions have been selling gold and silver, that we start to hear a narrative about a benign macro environment where inflation's coming down and you don't need to have gold because, hey, equities are doing well, bonds are doing well. Why do you need gold? So we might have a period where gold and silver undergo a correction while interest rates come down, oil comes down, the dollar comes down, equities rally before inflation, reemerges again, because we are in a secular environment where inflation probably won't go away for quite a long time. So to summarize, NVIDIA had good earnings. Is it going to be a sell the news event tomorrow and we have a pullback in equities, which have been up the last 4 weeks, or is this going to just be a continuation higher? I think that if it is a pullback, it'll probably get bought simply because growth is robust, oil's becoming down. That should be a tailwind for equities because that should feed into inflation going lower. And the smart money is still leaning bullish in equities. And I wouldn't really expect a major sell-off until their positioning becomes much less bullish and outright bearish. So I think that's where we stand. That was under 15 minutes. Thank you for watching. If you have any questions or comments, leave them in the chat. And I'll see you next week.